off my lamp, driving crazy, stroking the air from the babies. Nothing compares, driving crazy.
What's going on, traders, and welcome back to my YouTube channel. In today's video, I'm going to be showing you a trade that was taken live on USDJPY last Friday, showing you the entry, showing you the trade management, and then also how I closed the position as well. At the end of the video, I'm also going to be doing a complete breakdown on EURJPY, a trade that was taken last week, which totaled to a +9 risk to reward ratio. So I'll be breaking that down fully. And yeah, if you're not already subscribed to the channel, guys, I know most of you aren't. Hit that subscribe button so you don't miss any more content, and leave a like and a comment. Let me know your thoughts in the comment section below so I can answer some questions in the future videos that you guys have. But yeah, I hope you enjoyed the video. Let's get straight into it. Okay, so I've taken this position today on USDJPY. If you come in, this is the position taken on my phone. Don't know if you can see that there. And then this is the position. Now, it was also sent into my team, and I'm gonna quickly just break down the analysis for you. I mean, first things first, USDJPY is a massively bullish pair. If you look at the higher time frames, the lower time frames, every single time price is breaking through key levels of resistance, we're pulling back and retesting it as support. As we formed this strong bullish impulse to the upside here, we then started to see price correct. And that is the reasoning for my entrance, because this is a continuation pattern. And then as price rejected support, I took my position with stop loss just below. And then as you can see, price is now moving to the upside. I've trailed my stop loss into profit at about a 1 to 1.5, just in case price was to reverse. But I will also be looking for a scaling position if price manages to pull back to retest this level of resistance as support again. I'll be looking to take a second position, continuing with price. So yeah, that's the position taken on USDJPY today. I don't actually have a take profit level, purely because when price is pumping like this, rather than having a take profit level, I just trail my stop loss into profit. And then whenever price decides to reverse, it just takes me out of the market automatically. That's how I maximize on my profits when I'm entering trades and manage to catch the big risk to reward ratios. But yeah, guys, I will update you later on today on how this position performs.
Inconsiderate, right? But what I was looking at is this A and D here, this accumulation phase, liquidity points. But the sort of entry model is you wait for.
So as you can see, price decided to completely reverse on us. The scaling position that I took got stopped out at break even, and the first position that I took, we managed to close out at a +1.5 risk to reward ratio. That's just what happens. Price isn't going to always fly. We have to trail our stop losses to make sure if price does reverse, we end up getting out at a good time. I've actually also taken a position again, because if you come into the screen, you can see where price decided to break this bearish market structure, form a new higher high within the market, pull back, retest previous resistance as support. So I've decided to take a position on this. My stop loss is trailed to break even right now on that. So yeah, we'll see what happens, but it looks good. I'll update you guys on how the position moves at the end of the day.
To the sky and spending time out looking at the pink and sunsets.
Top off my lamp, driving crazy, stroking the air from the babies. Nothing compares, driving crazy. Both got no cares but a slave.
Took way too long to tell me you were ready. Was nice to know you, but I'm off it. Don't come back around just to tease me. Don't come around to drive me crazy. I'm way too nice all the time.
So it's 11 o'clock at night. I finished all my meetings for the day, my one-to-one calls, my group calls, other meetings, and I'm ready for bed. I'm gonna drive to the office tomorrow and film all the analysis for you guys that I took last week and this week. Some really, really great trades. So hopefully you guys take some value out of that. But before I go to bed, I just wanted to break down my current funding and prop firm situation. And for those of you that follow me on Instagram, you would have seen that I recently just got max allocation with FTMO, which means that I have 400k worth of trading capital to trade with. And I've done that by passing 200k evaluations, which went really smoothly, got them passed, and now I have the live capital. Now, what FTMO allow you to do is to merge the accounts together, so that rather than trading two 200k accounts, you can actually merge it together and trade one 400k account. However, I'm actually going to be keeping them separately and just trading two 200k accounts, because I like to diversify as much as possible to keep the accounts for as long as possible and obviously make as much as possible at the same time. So the reason I do that is because I understand that most traders consider the rewards before the risk, and I know that most traders are likely to merge the accounts together. And if most traders are losing, I always do what most people wouldn't do, so I'm going to keep it separately. I'll probably trade one account until it's blown, because inevitably, eventually it's going to blow. And then once it blows, I have the other account to trade with. Or I will just trade one account 1 week, one account the other, different risk, different currency pairs, basically just to diversify. Because I was speaking to someone in my group earlier today, actually, and they said something about targets in trading, you know, setting yourself targets, for example, weekly or monthly percentage targets. Let's say, you know, targeting 2% a week. And I said to him, in an industry where deep down you never know what's going to happen next, no matter how good of a trader you are, anything is still possible, okay? So in an industry where anything can happen, how can you set yourself a target? In my opinion, you are just setting yourself up for failure and disappointment that could have been avoided. For example, if you set yourself a target of, let's say, 2% a week profit, if you then have a minus 3% week, which is going to happen, you're going to have losing weeks, losing months. If you then have a losing week, you're then going to take that negatively because you set yourself a target of that 2%. So you're going to be affected emotionally and psychologically from that loss because of the target that you set yourself, which could then have a damaging effect on your psychology, on your trading going forward. It can lead to revenge trading, over trading, when in reality, a losing week, if anything, should be seen as a good thing. It should be seen as, in my opinion, on how I view losing streaks or losing trades, is every losing trade is bringing you that one step closer to a winning trade. So I try and flip it on its head and see it as a good thing, because I know most people would view it as a bad thing. So I view it as a good thing. So yeah, I'm going to be diversifying as much as possible. And I know the saying normally goes, hope for the best and prepare for the worst. But in my opinion, in trading, you shouldn't really even be hoping for the best. You should only be preparing for the worst. That's what your sole focus should be. So for example, with this 400k I have with FTMO, I'm preparing for the possibility that I could lose those accounts. So then I'm taking action on that possibility. I'm buying other funded accounts to have capital there just in case they blow. I'm trading my personal account. I'm focusing on other businesses. I'm basically doing things to make sure that when and if that does happen, I'm prepared for it. Because when it comes to hoping for the best, I know it's so easy to get, let's say, 400k worth of capital and say to yourself, oh, if I just make 10%, that's 40 grand. You think about those things, and you might not think it, but it's definitely in the back of your mind, the potential rewards that you can gain. And that's what traders do. They think about the rewards before the risk, when in reality, it should be the risk before the reward. That's why it's called risk to reward, right? So yeah, that's going to be my kind of sole focus on these accounts, is keeping them as long as possible by diversifying it. But yeah, let me know in the comments, guys, what would you do? Would you merge it? Would you trade them separately? Are you someone who constantly thinks about the rewards before the risks? So yeah, it's definitely something to think about, and that's just how I'm personally going to be tackling it. I'm always, you know, hard on myself as much as possible and have the understanding that anything is possible, you know, and I could lose the account, so I just have to prepare for that and make sure I'm ready for it. And then if the payout does eventually come, it has to be realized. You know, you can't just make profit on the trading account and then think you've actually got that money. You have to wait for the payout to actually land in your bank. That's when it's actually realized, and that's when I celebrate. I don't celebrate until that's happened, because we know anything can happen, even with these prop firms, even FTMO, surprisingly, I imagine. So yeah, that's it, guys. I am going to head to bed and head to the office in the morning, and next time you see me, I'll be on the charts breaking down the analysis for you. Right, so as you saw, the trades on USDJPY, the third one got stopped out at break even, and I totaled a plus 1.5 risk to reward on that day. However, I'm going to be breaking down a trade that was taken on EURJPY at the start of the week, which totaled to a plus 10 risk to reward ratio, which was great. This trade was not only taken by myself, but it was also sent into my VIP group, which I'll put a screenshot on the screen now. And if you want to join this group where I send trades every single day, I go live, break down everything that I'm doing every single day, then just click the link in the description of this video and you'll be able to join. But anyway, straight into the analysis on EURJPY. Now, most JPY pairs at the moment, and for a long time anyway, on the higher time frames have been extremely bullish. So, you know, the daily time frame, the weekly time frame, as you can see here, has just been a very, very dominant, bullish market. Now, what that means is for my trading, when I am going with the higher time frame trend, it creates a higher probability setup for me. Now, what this means is I tend to hold trades for longer. I tend to, keep trailing my stop loss, don't even have take profits, and even make my take profits a lot longer than if I was going against the higher time frame trend. If I was going against the higher time frame trend, which I do, I manage it a bit differently. So that's all it means. It doesn't mean don't trade against the higher time frame trend, because you can, and you can be profitable doing so, but you just have to approach it with a different mindset, because when you're trading against the higher time frame trend, you might have to trail your stop loss to break even sooner. You might have to take profits sooner, because at any given moment, the higher time frame trend could just kick in and completely wipe you out. So it does take a little bit more of a strict trade management, but both can be profitable for you. But yeah, anyway, on EURJPY, on the higher time frames, massively bullish. So when I'm going for buy positions, it's definitely what I want to see. And you can see on this daily time frame, every single time price does push back down, which it does do a lot. As you can see, we had a huge drop here. Every single time it does push down, we fail to form a new lower low within the market. So every single time price is just consistently forming new highs, we're failing to break. And the only way I would say that EURJPY would be a bearish currency pair is if we actually started to break this market structure and begin moving to the downside, which can happen at any point, but until then, going for the buy positions is definitely a more probable position for myself. So that's the daily time frame, and what I'm going to do now is I'm going to drop down to the 1 hour time frame. Now, the 1 hour time frame is where I start to analyze and identify market structure. So I'm looking at the highs and the lows to identify whether buyers or sellers are in control of the market, and then potentially if we're getting a flip of that market structure. So let's take a look at it. So this is the 1 hour time frame. As you can see, we're starting from up here, we're moving to the downside, and then we're pulling back up. Okay, we're moving to the downside, and then we're pulling back up, and we are downtrending. Reason for that is because we haven't broken the most recent lower high point within the market, and then we're continuing to drop to the downside, so on and so forth, until this moment down here where we fail to form a new lower low within the market, and instead we form an equal low, we form a double bottom. That's the first initial sign of a reversal. And then the confirmation of a reversal is this move here, where we finally break market structure. Okay, so that is when I say to myself, okay, price is now back in bullish market structure. We're also going with the higher time frame trend. I want to be in buy positions at some point throughout this next phase of the market. And we can visually represent that as well by drawing in a trend line down here. We can visually see how we've broken away from that with this move. This is the double bottom down here, and we form that new move within the market, this one here, which is the confirmation needed to say that we're beginning to break market structure. And we can even say we're forming new higher highs followed by higher lows, and price is just continuing to step up. So I want to be in this market. Okay, now the next thing we're going to look at is the 15-minute time frame. And for those of you who have been joining my Sunday live sessions, where I jump on live for free every Sunday, you would see that when I'd done the call, I initially thought that EURJPY was going to be moving bearish, and I'll show you why. Because on this time frame, you can see that we are stepping up, we are moving to the upside. However, at one given moment in time, we actually looked like we were going to move bearish, okay, because we had this strong move to the downside here. And what that strong move did was we broke market structure. We broke through this key level here within the market. And as you can see, that is Friday. And then this is Sunday when I was doing the live call. I was saying that I was going to be looking for price to retest this level. And then I was going to be trading down to this zone, okay, because we had broken market structure. Now notice the reason why I was targeting this level is because if I was to sell this market, which it did kind of sell off a little bit, but if I was to jump in that market, why am I only going to be selling down to here when, you know, I could potentially sell down to there? That is also another target. And that's because EURJPY on the higher time frames is bullish, okay? It's massively bullish. So going into sell positions is going against that trend. So when I'm going against the trend, I tend to have shorter profit targets. Hence why I was targeting this level here. If this was going with the trend, then yes, of course, I would have targeted much lower, trailed my stop losses, and tried to scale in as much as possible. But when I'm going against the trend, I can still do so. I just have to change the way I approach and manage the position. Okay, but anyway, so let's take a look at what happened after that. So this was Sunday market open. Look at the time at the bottom as well. So this is, you know, midnight, 1 a.m., 2 a.m., 3 a.m., so on and so forth. So I'm not even awake to see that this is happening. I'm not even on the market to even be jumping into any sell positions. I'm waking up when this strong bullish move is taking place towards the upside. Okay, I am jumping on the charts when this is taking place, and we are now broken back above this high point within the market, and it seems to me that price is back in bullish market structure, which is happy days for me because I want to be in buy positions going with the higher time frame trend. But the first thing I do when I come on the charts and I'm looking to jump into a trade is I'm looking at where is price heading to. What is the next level where if I was a seller, I would want to be getting in the market, and if I was a buyer, I would want to be getting out of the market. And I identified that level as this one right here. Okay, that was the level where if I was, for example, a buyer from all the way down here or anywhere on this impulse move, where would I want to take my profits? That would be this level. If I was selling the market and I was waiting to get into a sell position, I would want to wait to get into this level. So that is why my target was at that level of resistance. Now, in terms of the actual entry, it's very easy when price breaks through this level of resistance here to believe that price is just going to pull back like this to retest this level to then come up to there. Okay, I do that a lot, and most of the time it does work. However, when price is extremely bullish or it has loads of momentum behind it, I tend to find that price doesn't ever actually pull back. It just keeps on going and going and going. It doesn't have time to pull back. And when the momentum is that strong, that is when I drop down to the lower time frames to see if I'm missing any hidden structure that is forming on the lower time frames that I am unaware of because I'm on the higher time frame, like the 15-minute time frame. So what I do is I drop down to the 1-minute time frames to get a better understanding of the market structure on the lower time frames. And that brings me down to the 1-minute time frame, which is where I took my entry. And we can see on this 1-minute time frame that price is moving towards the upside. So all I want to be doing is jumping in on this trend on the 1-minute time frame. And I did that by just jumping in on the higher low point. And we can see that price has, potentially is pulled back to like this level within the market here, around this kind of previous resistance to be used as support. But the main trigger for this trade and for this entry was the Fibonacci retracement tool. Because if I drag this from swing low to swing high, we can see that price retested pretty much perfectly the 61.8%, which is known as like the golden zone for the Fibonacci retracement tool. So that combined with the previous level of resistance to be used as support and potentially like a trend that was moving towards the upside, that gave me 3 confluences, 3 trigger points to enter that trade at that level. Now, I'm not just entering a trade at that level for the sake of it. I am waiting for price to obviously reject it. Okay, I don't enter a buy position when price is coming down. That's like trying to go up an escalator that's moving down to the downside. Probably not the best analogy, but you understand what I'm saying. So I like to be entering buy positions when price is moving to the upside, when I'm starting to see that momentum shift. Okay, I'm starting to see a reaction from buyers entering the market. And that's exactly why I entered the trade there. So let's play out price now and see what happened next. Price began to move to the upside, came back down to retest that level again, and then we completely broke through market structure. Now, how did I manage the trade? So when price broke through structure, so when we broke through this level within the market there, as you can see multiple times, we're using it as a level of resistance. Once we finally got this push to the upside, breaking away from that, that's when I trailed my stop loss to break even. Okay, so I made my trade risk-free and let it run. Now, this is the important part, which I want to tell you guys about, is I actually had to leave the office at this moment in time. So I had my stops move to break even, I had to leave. So I left the office. However, if I was on the charts at this time and I sent it into my team for them to potentially take advantage of, and how I normally always trade, is I would be looking for scaling positions to maximize my profits. Okay, so I am looking to not just set and forget, I'm looking to enter the market and then potentially add more profitable positions to that to take advantage of the whole move. And the way I do that is by looking for price to pull back to retest this level here, followed by a continuation. Okay, and let's play out price because I believe it happened pretty perfectly. We came back down to that zone and then we just continued moving higher and higher. So at this point, when I'm back in the office, I'm trailing my stop loss below structure as well. Every time structure is being formed, I'm continuing to trail my stop loss to the upside. But in this instance, we did just continue pumping. And if I play out price, you'll see that take profit was hit. Now, if I continue playing out price, you guys are probably going to say to me, well, why didn't you just hold? Price was moving to the upside, you're going with the trend. Why not just continue holding? Let's see what happens. Price came out. Yeah, basically to cut it short, price just kept continuing to pump and fly towards the upside. And if you look at EURJPY now, it's extremely, extremely bullish. But yeah, you get the idea. Price just kept on moving. Now, the reason I didn't hold that and the reason I didn't continue to hold and trail my stop loss is because I made a pre-planned decision. Okay, I pre-planned when I entered the trade, or even before I entered the trade, I had an idea that price was going to be coming up to this level, and that's where sellers might be interested. So I planned already that that was going to be where I was going to get out of the market. That's how you avoid emotional decision making, because if you pre-plan it and then when it happens you make a decision based on your past self and that decision, you can't then be annoyed with the outcome because you've made it before it's happened. Whereas I see a lot of traders who will wait for it to come to a level like this and then make a decision whether to close. You know, do I close trades? Do I trail my stop loss? Do I just let it run? And it's that decision on the spot that can lead to psychological and an emotional trading, which you just don't want to do. Okay, it can lead you to make, you know, irrational decisions in the market, when if you just have a plan and stick with it and walk away from the market, happy days. You know, you've stuck to a plan, psychology is intact, you can move on. But yeah, in this instance, great target. And I believe as well, if I use the price range tool, it looks like it's similar. If I measure out that move and I put it to there, well, there you go. It's exactly the same. So it was definitely a planned and calculated decision to make that my take profit level. So yeah, great trade, plus 10 risk to reward. And yeah, that's the analysis behind the trade. I hope you found some value from this video. I know I haven't been posting as much as I would have liked, but I'm definitely going to pump out more content in 2025. Make sure you're subscribed to the channel, because most of you who watch this aren't subscribed. So what's going to motivate me to keep posting more content is obviously more subscribers, to understand that most of you are engaged with my content. So that would be great to see more subscribers on the channel. But yeah, leave me a comment in the comment section as well, what you thought of the video and any questions you might have that I can answer in future videos. But apart from that, guys, I hope you all have a great Christmas and New Year, and I will see you in the next video.